Okay guys, just very quickly, I'll just show you exactly what I did in terms of my backtesting for this very quick daily chart that I was looking at just today, as I just kind of just sat down and I thought, okay, let me just have a look and see how the higher time frame structure could have played out, what I would have done in a different way. So as I normally do, as I told you, simulation wise, took the chart, basically took it back to beginning of October to where break of structure had occurred to the downside. We've got retracement and pulling back into this area. So what we would basically be looking for, I'll just take away what we don't need. What we'd basically be looking for is you're looking at the higher time frame structure, and what you want to do is on the weekly have a look and see exactly where structure has broken. So one of our key points that we want to look at in the week is the last up to down candle for the week. So this is obviously the last push up to then push down, which broke structure here. So we kind of want to mark out the wick of this candle as a key, a high level zone that we'd be looking at. Ignore all of this other stuff, please. Let me see if I can get rid of that. No, I can't. It's everywhere. So, okay, just try and ignore the rest of the stuff. I don't want to try taking it all off. But weekly candle, up to down move, which broke structure to the downside here. We mark that as a key point of reference to see where the market comes back into. And as we can see, the market kind of retraces down. And this candle kind of is the one that then broke structure high, tapped into the open of the week, and then broke down. So what we do is if we just mark out this point here, and then go down onto the daily chart, we can see this is where the market came back to test. And we have break of structure to the downside. It comes back, leaves behind equal lows here, retests, and then it comes back and it wicks in to the zone that kind of held the week up. Then it starts to reject off that point. So these rejections are what we'd kind of want to continue to utilize, and then we'd enter our short trade here to take it down. However, on the daily, what we were looking for was the market came back up. We're monitoring this point here to see whether we get a continuation of sells from this point, and when the next day follows out, it doesn't quite tap in yet. It doesn't tap in. It's testing. It taps in here. So now we're basically looking for rejection of this candle to take the market low. What we'd be probably looking to do is you'd actually enter a trade here aggressively if you wanted to. Initial risk would be this entire candle. It's a massive thing, obviously, because it's daily chart. This is how aggressive traders trade. We want to see a confirmation on this. So effectively, you look for rejection, you get rejection, deeper mitigation. It would have basically be played out on this day. So you'd want to enter somewhere on this wick as it kind of comes in and hits the open of the candle. You'd enter, and then you can see that the market continues to reject off this area. So you basically have some profits from here down to relative equal lows. Market then comes back, retraces back up. Now we're looking for where we could possibly look for entries in terms of the daily. So this weekly obviously then gets mitigated. We're looking for this daily entry up here in terms of the last up candle that broke the move to the downside. So this gets deleted. It's now been mitigated. We then move on into the week. We see that the market comes up. It tests the supply zone. It basically comes in, mitigates this supply candle. We're now looking for rejection of this candle as it develops. And we can see the next candle comes up, tests again. It's testing the supply zone, which is the highest area of the candle that kind of broke down is obviously the optimum entry. That's where the most discounted price lies. And we can see we've got entering into the zone, rejection from the zone. It doesn't want to go higher than this point. Then we basically have rejection again, and we would now be looking to enter on this trade. So where we get the pull, the retracement, and now the pullback starts. We've got break of structure here on the higher time frame. It shows what it intends to do in terms of going for sells. It's now retracing back into the area of interest. As it gets back up into the area of interest, it comes and it tests probably 50% of the wick on this candle, which we can see it takes 50%. So it's taken the 50% of that candle. That's our cue to enter. We then basically look to enter our trade on that wick being mitigated 50%, highs above the previous high that's been respected, and then the trade kind of moves. So that is the analysis for why this trade would have been taken. and you've got rejection of the supply candle, rejection of the supply zone. As it gets tapped, it starts to reject, moves off, retraces, respects the highs that have been created, and then, as you can see, continues to move off throughout the remainder of the week. And that effectively is where you'd kind of probably want to target lows down here. But effectively there is a low down here, and I just marked up exactly why these lows got targeted. And we can see further back here, you've got a demand candle here that was kind of not mitigated. So the market came to basically tap out of this area. And the reason it didn't want to drop down below this is because everything below this last wick has already been mitigated 50% by this wick on the next bearish candle. And this is the area that we would have been targeting, because there seems to have been some need for mitigation here. But obviously, where the market's kind of mitigated a lot of buy orders here already as it's moved off, this was a market maker move where the banks got involved and moved the market themselves in a very aggressive way. And therefore, there doesn't seem to be much need for them to break down below this level where that horizontal line is. And as you can see, what they've come and done today, they've literally come liquidated lows at the end and then kind of moved the market in the opposite direction.